What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, I want to go over with you some of the cleanest trend continuation trades coming out of the New York session on Monday, June 30th. All right? These were some picture-perfect opportunities, and we would do well to study these charts because this is a very common occurrence in the market. You're going to get trades like this somewhere in your basket of instruments every single week, okay? The reason for this, the reason why I say this is because this is just basic market structure. This is just how the markets move. And us being traders, people who want to buy and sell into these markets, need to understand this foundational information, okay? The way that the markets move. Otherwise, we have no hopes of succeeding, right? Now, we know from listening to and learning from Stacy Burke that the market can only do three things, right? The market is either going to break out, pull back, and continue, which is what we're looking at today, or it will break out, pull back, and reverse, or it can break out, pull back, and enter a trading range, right? So the market can only do three things. And there are many reasons why the system is built like this, around these levels and stuff like this. But if you notice, these three things that the market can do always start off with the same first two steps, right? Every time it's breakout, pullback, right? Everything starts with the breakout, pullback, okay? Our day count starts with the breakout, okay? That's why our day one is always a breakout, right? A new high of the week level, that starts the day count. You understand? So these are the 3-day setups. We're using the most basic information to sort of act as like the glue to hold these ideas together, right? So breakout, pullback, continuation. Let's look at it. So here we're looking at the euro dollar currency pair on a 15-minute time frame. And you can see we're looking at Thursday, Friday, Monday as our 3 days. So Thursday breaks the high of Wednesday, Friday breaks the high of Thursday, and then eventually Monday breaks the high of Friday, and this happens in the New York session. All right, now I've marked off the breakout, pullback, continuation, right? But I do want to sort of draw your attention here to breakout, pullback, and then here on Monday when we open, we sort of trade sideways in this narrow range between the Asian and London session, okay? So this is a breakout, pullback, trading range, parabolic, trend continuation trade, okay? This is a coil here that is happening around closing price and Friday's high, right? We're coiling underneath the high of Friday without taking out that level. And Stacy says that when the market does this, when it coils underneath the high without taking out the high, it's potentially gearing up for an explosive move, right? So this is the big picture, the breakout, pullback, continuation, all right? And this can happen in a few different variations. We're going to take a look at 3 different variations today, okay? First, let's look at Monday's trade, okay? So when Monday opens up, here in the Asian session, we put in a peak formation low. This low becomes the low of the day until we get to our New York open, all right? And London puts in this peak formation high, and this peak formation high is the high of the day as we come to the New York session. So we have these 2 levels. We can project those levels across. If we do, we can see that we get 1 push into that level, 2 pushes, into that level. And our third push happens right here at the New York Open. And this push actually goes through that level. So we're putting in a new low of the day here, right? Now, at this point in time, when we break through the Asia session low of the day, peak formation, that excites traders. This is when the daily candle flips from green to red. All right, and people get excited. They start to short this market because that candle flip colors. Right now, all their time frames are aligned, or whatever. Okay, so they get excited. They get into this market. We have our first hour down. Stacy always tells us that first hour often traps traders at the low or at the high. That's our trap. The first hour down. The second hour goes sideways. That's our shift. The market here is shifting. Then our third hour takes us on that parabolic trend continuation, all right? And effectively, all of these traders here that shorted this market are now trapped on the wrong side of the market. We know that the smart money strategy is buy low, sell high, right? That's what we're trying to do. We're trying to buy low and sell high. In order for that to happen, right? Smart money needs someone to take the opposite side of their trade. So if the smart money traders, aka winning traders, if they are going to buy low, they need someone on the other side of that trade that's willing to sell low, right? And that's what I mean, that smart money needs a sucker on the other side of the market, all right? And this is how they achieve that, right? To get people in this market unknowingly selling into the low of the day level. And then right at 10 o'clock, this 5-minute candle close, we have a pin bar entry here. We can enter this market, put our stop below that wick, and aim for the previous day's high, or we can measure from this low to this high and project that for a 100% range expansion profit target on the day. Very simple stuff. This is a very well-engineered chart. Your eyes should be trained to see this. And one thing I want to reiterate to you is that this is a third-hour trade, meaning that if you got to your computer screen right as the session opens, or maybe 30 minutes, an hour before the session opens, right? You're going to be sitting here for 2 or 3 hours before you get the entry signal on the 5-minute chart, right? That's a long time to sit there and not push buttons, all right? Most traders are going to be pushing those buttons, but if you know exactly what you're looking for, you should be able to avoid that happening to you, okay? Now here we're looking at the Australian dollar, US dollar, and I apologize in advance if this is hard to understand or whatever. I'm trying to keep it as simple as I possibly can when we're going over these trades, okay? But here is the Aussie dollar, US dollar on a 5-minute chart. And you can see that Thursday is our breakout level, okay? Thursday is our breakout day, day 1. Friday closes as an inside day, meaning that neither the high or the low from Thursday has been broken when Friday closes. That's an inside day. The inside day is a trigger day, which is a day that alerts us to a possible trade opportunity the next or following day, right? So Friday is our pullback. We pull back well into Thursday's range, right? And then this market pulls back and closes inside of the inside day range. When Monday opens, you can see this Asian consolidation. This is something that we want to see. We sort of want to see this consolidation either going into the close or coming off of the open. The Asia session, the London session will be a narrow range, just like the previous chart we just looked at. That's something that I have noticed. You will see this a lot, all right? Just like this. So then we have our buy low opportunity in the New York session here. So breakout, pullback, continuation. When we zoom in to Monday specifically, we have this narrow Asian range here. This peak formation low is our current low of the day when we are approaching the New York session. And before the New York session, in this gap time between London and New York, okay, we put in this new low of the day level. So we break out of that current day low, put in a new low, we throw this W formation at the low of the day, and then when we come to the New York session, the market shifts and begins to trade bullish. And again, 9:55, right? Timing rotations. We need to pay attention to the time on the clock and try to align our trades with new hours, with new 15-minute timing cycles, all these things, right? But here at 9:55, the close of the 9:55 candle, we have this pin bar for our entry, a 1-bar stop, aiming for the previous day's high, or again, we can measure this range and project that for a 100% range expansion profit target, right? So, and this is a 3-day setup, and the 3-day setup begins with the breakout pullback. This is just so clean. It's good to show you this, okay? Because this chart is very well engineered, okay? You can see the day 1, day 2, day 3, breakout, pullback, continuation. That's about as simple as it gets when it comes to trading the market. And these are going to be your bread and butter trades. Simple trend continuation trades. All of those times you've heard people say the trend is your friend, right? It should be making more sense now looking at this one chart. This is a chart worthy of printing out and pinning it up on your wall and be like, dog, I'm not taking a trade unless it looks like this. Here we're looking at the US dollar, Mexican peso. And I do trade this pair sometimes on my personal account, but unfortunately, with the prop firm that I'm using, the spreads are just so wide that it's not really worth my time to trade this market, right? But nonetheless, it does give very good setup sometimes. It moves, it's volatile, okay? And I think that is probably the reason why Stacy also sometimes shows this pair. You can see we've got Friday's high and low marked off. Friday breaks out of the low of Thursday and then pulls back and puts in a high of the day formation, drops back down to the low of the day and closes in breakout. Monday opens, Asia immediately breaks the low of the day, breakout. We trade sideways till London. London pumps into the New York session. By the time we get to New York, we're trading back into the high of the day level from Friday. A 4th-hour trade, 11 o'clock, right? So that's 3-4 hours you're going to be sitting there without an entry. And on this chart, the 15-minute chart's even longer than that. But again, here, after we drop and break these levels, the death line trade, we consolidate and go sideways for 45 minutes or more. Okay, throwing these wicks into the EMA. Here's our pin bar. We enter at the engulfment of that bullish candle, stop at the top of that wick, a 1-bar stop, aiming for the low of that Asian session, and it goes off without a hitch, stress-free trade, right? So I hope that makes sense. I hope it's easy for you to see. If you have questions, man, don't hesitate to reach out in the comments, or if there's a pair that you want me to look at, if there was a trade you took that didn't work out like you thought it would, let me know. I'll take a look at the charts. We can go over it in a video, you know what I mean, whatever. But I appreciate y'all being here, spending the time to listen to my perspective. I really appreciate that. I respect you for that. And until next time, I hope you continue to free your mind.